previous video, we briefly introduced the following four financial statements: the income statement, the retained earnings statement, the balance sheet, and the statement of cash flows. These statements provide relevant financial data for both internal and external users. In this video, we will focus on the preparation of the first three financial statements. The heading of each statement identifies the company, the type of statement, and the specific date or time period covered by the statement. The income statement reports the success or profitability of a company's operations over a period of time, such as a month, a quarter, or a year. In this example, the period of time is the month ended September 30th. The content of this statement contains three elements: revenues, expenses, and net income. The income statement lists revenues first, followed by expenses. Although in practice it varies, in this illustration, as well as for homework and exams, list expenses in order of magnitude. Finally, the statement shows net income or net loss. When revenues exceed expenses, net income results. When expenses exceed revenues, a net loss results. Final sums or net income is double underlined. Lastly, we will introduce another format in a later video. For now, simply list revenues first, followed by expenses. The retained earnings statement reports the changes in retained earnings for a specific period of time. The time period is the same as the income statement, so in this example, for the month ended September 30th. The first line item of the statement shows the beginning retained earnings amount. Then comes net income, followed by a subtotal, and then dividends. The retained earnings ending balance is the final amount on the statement. If there is a net loss, it is deducted along with dividends. It is important to note that dividends are not an expense, but rather a reduction of retained earnings, which ultimately causes a decrease in stockholders' equity. The elements or formula for this financial statement is beginning balance plus net income or minus a net loss minus dividends equals ending balance. The balance sheet reports the assets, liabilities, and stockholders' equity at a point in time or a specific date, in this instance, September 30th. This statement is prepared next because the ending balance in retained earnings is needed in preparing the balance sheet, more specifically, the stockholders' equity section. List assets first, followed by liabilities and stockholders' equity. Total assets must equal total liabilities plus stockholders' equity. When reporting assets, list them in order of liquidity, which is how quickly the company will convert to cash or use up. Always list cash first. If you are not sure how to list assets, reference the chart of accounts. These accounts are listed in order of liquidity. In this example, there is only one liability, accounts payable. In most cases, there will be more than one liability. When two or more liabilities are involved, list notes payable, followed by accounts payable, and the remainder of the liabilities in order of magnitude. Stockholders' equity is comprised of two parts: common stock and retained earnings. Common stock results when the company sells new shares of stock, and retained earnings is the net income retained in the business. In this example, SoftBite reports common stock of $15,000 and retained earnings of $1,450 for total stockholders' equity of $16,450. The statement of cash flows provides information on the cash receipts and payments for a specific period of time. This statement will be covered in another video. The last thing I want to discuss is how these statements are interrelated. Net income of $2,750 on the income statement is added to the beginning balance of retained earnings in the retained earnings statement. The ending balance in retained earnings of $1,450 is reported on the balance sheet, more specifically in the stockholders' equity section. As I just stated, the ending balance in retained earnings of $1,450 is reported on the balance sheet, again, more specifically in the stockholders' equity section. Cash of $8,050 on the balance sheet is reported on the statement of cash flows. The income statement, retained earnings statement, and statement of cash flows are all for a period of time, whereas the balance sheet is for a point in time.